In this video, I'm going to show you exactly how much Canadians have saved by age, starting from your 20s, 30s, 40s, all the way into retirement and beyond, and how you could use this data to improve your own personal finances. But first, let's start about why should you care about what other Canadians have saved? Well, let me ask you this. If you wanted to lose weight, what's the very first thing you should do? Well, you should step on a scale. Well, you could think of knowing what your savings are and comparing it to the rest of Canada as stepping on your financial scale. And once you see exactly where you stand in comparison to the rest of Canadians, one of two things will happen. You might realize you're behind. And that's okay, because now you know and you have clarity. You could think of it like a wake-up call, perhaps. Or you might see that you're ahead and finally feel some peace of mind in all the noise. If you're someone like myself who, no matter how much money they earn or save, they always feel like they're behind, knowing the stats of this and seeing that you're doing okay can be a huge relief. And it really was for me when I saw that I was ahead of the curve here. And I hope it brings you that same clarity no matter where you stand, because once you stop guessing, you could actually start planning. So here's a breakdown of the financial assets of Canadians under 35. But first, let's meet Marge and Homer, who are in their early 30s. They've moved into their first place and they're juggling rent, student loans, and entry-level salaries. Bart is just a toddler, Lisa's on the way, and they're trying to enjoy life while keeping up with bills. They've heard that they should be saving, but between daycare costs and takeout dinners, it's tough to get ahead. And this is where a lot of Canadian families start. They're hopeful, they're overwhelmed, and they're trying to make it all work. So in 2023, the median single Canadian under 35 had saved $36,500. For couples or shared households, the median was $62,700. And as you can see, the averages are much higher, more than double. So it's $79,500 for singles and about $156,000 for multi-person households. But averages are definitely skewed by really high earners. Think your multimillionaires or even billionaires. So the median is more representative of what most people actually have. So use that as your benchmark when comparing it to yourself. So there's some interesting trends I spotted here. From 2005 to 2016, savings grew steadily, and that's likely due to a strong economy, plus the launch of the TFSA in 2009. But since then, progress has really slowed, especially for families. By 2023, singles had inched ahead, but family medians barely moved. And even with two incomes, most families under 35 have saved less than $63,000. But I could understand why they struggle so much because of the very high living costs now in Canada. And if you're under these numbers, you're not doomed, but the earlier you face it, the sooner you can start compounding your way forward. And here's a pro tip. Because you're watching this channel, I just assume that you are more serious about your finances and that you are a lot more motivated. So try to aim for 50% or maybe even double of the median. Now, before going on to the next age group of 35 to 44, I wanted to explain how I got to these numbers. So this data was a bit tough to interpret, and I spent a lot of time trying to calculate the most accurate numbers possible because it wasn't in a very clean data set. So I pulled it straight from Stats Canada, but I had to combine two categories. The first was the private pension assets, which includes things like RSPs, pensions, locked-in accounts. There's also the non-pension financial assets. So those are things like TFSAs, stocks, mutual funds, GICs, and just savings accounts. So I left out things like housing, business equity, and vehicles because I wanted a pure snapshot of financial long-term savings. Now I want to stress that these numbers won't be exact. Let's call it a margin of error of about 10 to 20% either way, because my method of adding up the medians and averages won't be exact, but it's close enough to help you benchmark your progress. And if you really want to nerd out on the stats, Stats Canada breaks it down even further. You could look up things like the median RRSPs, TFSAs, and more. You could find the data that I used by doing a Google search for a table called Assets and Debt Held by Family Type. Now let's move on to the financial assets of Canadians aged 35 to 44. So now the Simpsons are in their early 40s, Homer's grinding at work at the nuclear power plant, Marge is managing the household, and Bart and Lisa are in school. They've bought a home in a decent neighborhood, there's mortgage payments, rising grocery costs, and helping Grandpa Abe, which are all part of their financial equation. And Maggie just showed up, which was a nice surprise. They're earning more, saving a bit, but wondering, is this enough? So this is the decade where financial stress hits hard and where momentum matters. In 2023, the median single Canadian aged 35 to 44 had $81,500 in long-term savings. The median family had $139,000. That's a solid jump from the under 35 group, about $45,000 more for singles and $75,000 more for families. Now, looking at the trend from 2016 to 2023, family savings barely moved, just a $2,000 increase in 7 years. Singles actually dipped in 2019 before bouncing back. So you can see even in peak earning years, savings growth can stall. The key takeaway though is if you're around 40 with $81,000 as a single person saved or $139,000 as a couple, you're right at the Canadian median. So you're not behind, but you're not ahead either. Now is the time to ask yourself some very important questions, things like how much could I grow that amount by retirement age of around 65? And would that be enough to last for 25 plus years of retirement? And what if investment returns disappoint? There's still quite a lot of time to course correct, but not forever. So if you're below the line, start closing the gap, and if you're above, just keep the momentum going. Because without intentional saving, it's easy to hit the age of 50 at this point and wonder why nothing's changed. And an important note is if you're not tracking your net worth yet, you can check out my free net worth tracker for Canadians. It's a simple way to stay on top of your finances. You could download it on the website. The link is in the description. Now let's talk about the financial assets of Canadians aged 45 to 54. Marge and Homer are now in their early 50s and finally hitting their highest income years. Lisa's probably heading for law school and Bart's thinking maybe community college. And the bills keep coming. There's tuition, house repairs, maybe helping Bart. Yet again, retirement doesn't feel far anymore, but it still feels uncertain. They're trying to play catch up, but time is ticking. So you can see in 2023, the median single Canadian aged 45 to 54 had saved $152,100. And the median economic family had saved about $274,000. From 2005 to 2019, savings grew steadily, and singles nearly doubled theirs, and families crossed the $300,000 mark by 2016. But something interesting happened between 2019 to 2023 in this age group. Things kind of got reversed. Median savings fell by $36,000 for families and $26,000 for singles. And the likely reasons, I'm guessing, are probably there were some market crashes during COVID, there was also inflation, or perhaps just changing priorities. But whatever the cause, it's a red flag. Savings can stall or shrink in your 50s if you're not staying on top of it. Even after decades of work, half of families in this group have less than $275,000 saved. And this is when you have to start thinking about having a retirement that could last 25 or more years. This is also a crucial decade. If you're behind, you can still catch up, but the window is narrowing. But that's exactly what we help clients here with at Blueprint Financial. Whether it's coming up with ways to boost your savings rate, optimizing your TFSA, or catching up on RSPs, we help you plan for your financial life. Check out our website and book a discovery call with us today. Now let's look at the financial assets of Canadians aged 55 to 64. The kids are grown and the house is almost paid off. Homer's back hurts a little more in the mornings. Marge is wondering if they should take CPP early or wait. And they saved up a fair amount. But between inflation, market dips, and rising healthcare costs potentially in the future, it's hard to know if it's enough. And this is the phase where every decision counts because there's not much room left for earning income or to make more mistakes. This age group has the highest medians of the list, which makes sense. They've had the most time to save and compound. From 2005 to 2016, growth was steady for this age group, but since then, progress has stalled, just like the last age group. By 2023, median savings for families had actually dropped compared to 2016 and 2019. And again, that's a red flag. Even late in your career, savings might not be guaranteed to grow. And that's a bit of a red flag to me, and it could indicate most likely the increased cost of living in the past few years, which of course is a huge concern for almost every Canadian. And again, we can see the gap between singles and families also widens here. In 2023, the median family had nearly double the savings of the median single. And even with a solid $490,000, just shy of $500,000, a typical family may struggle to stretch that over 25 to 30 years. Especially with inflation and longevity risk. And singles with $270,000 face an even tougher path, with fewer economics of scale and less access to things like pension income splitting. And as I've mentioned in previous videos, I did a deep dive, it's much harder for singles to retire. This is the final stretch though. The decisions made now, such as when to retire, when to take CPP, and how to draw down your savings, can make or break your retirement. Now let's take a look at what Canadians 65 and older have saved. So they've retired, finally. Homer spends mornings on the porch. Marge likes volunteering at the library, but their savings now need to last, maybe 25 or 30 years. They're drawing down from their RIFs, leaning on CPP and OAS, and hoping that their plan holds up. The kids are doing okay, but sometimes still ask for help. Retirement was the goal, but peace of mind? Well, that depends on the planning that they did. So in 2023, the median single retiree has $227,100 in financial assets. And the median retired couple or family has about $442,000. And it makes sense that it's lower than the last age group as they start drawing down their assets at this age. So what stands out is even after decades of savings, the numbers haven't moved that much. Some interesting trends are that median family savings peaked in 2016 and have dipped slightly since then, and singles have seen almost no growth in the last 10 years. Again, probably because of the increased cost of living. So what's really important at this age is much less about earning income, although there is some opportunities for, say, part-time or what they call hobby work. But generally, in this stage, retirees are drawing down on their savings, and it's likely that it's decreasing instead of increasing, unless their investments are starting to do really well. Also, a huge decision is when to take CPP and OAS, and that will have a huge impact as well on your finances in the later stage of your retirement. Say your late 70s, 80s, and maybe even your 90s. But we have seen people successfully retire with around this number for households, 500,000. It is doable. Another huge factor to this is whether or not you own a home. So that will greatly impact the success of your future retirement planning. So that's also something that is important to factor in. And it's one thing to know the numbers, it's another to make them work for you. So whether you're in your 30s or your 60s, it's never too late to align your money with your goals. If you want a second opinion or just need some clarity, we'd love to help. Head to our site and check out our services and book a call with us if you want to chat. And YouTube thinks that this next video will be perfect for you on the screen here, so go ahead and check it out.